Hi, everyone. Thank you so much for taking time out of your busy schedule to spend a few minutes educating yourself about the market. I am Kelly Baldwin, and my business partner Coulter are here with real estate experts.
Hello and welcome to our 2022 summer market update and forecast.
We've been approached by quite a few of the clients that we're working with and helping, and they've been asking us, very similar questions. So we just wanted to take this time to provide more clarity about what's currently going on in the market. And the question that we've seen and heard a lot is this a correction or is it a crash around the corner? So to really understand where we are at today and what might happen in the future, it's best to look back about 40 years to see what's happened in the past. As you can see, we've had four major corrections over the course of 40 years. And that average correction is about 10%. But what about a crash between 2008 and 2011? The housing prices have dropped 27%. But what does it take to crash the market? Well, tons of homes for sale. In 2008, we had 14 months of inventory, almost 10 times the usual number of sales for home. And if you look at today or going back 10 years, we've had about 1 to 2 months of inventory, depending on the seasonality and what month you're looking at. So the number of homes is for sale is up, but the inventory is still very low. And this is a supply and demand market again. So we're just not at that level of inventory where we've seen back in 2008 to really crash the market and have the prices come down. So there again has been a pickup in inventory that we've seen recently, but it's not from the big increase in new listings, but it's rather a slowdown in the pace of sales. And remember that month supply measures the inventory available relative to the pace of sales. So I want to share this chart with you, and this shows you months of inventory for homes for sale. This is going back to April of 2022. You can see, or you can recall, if you were in the market then searching for properties, it was a very hot market. The prices were going up like crazy, and we had less than 1 month supply of inventory. And over the past couple of months, it has peaked, and we saw 2.2 months of inventory back in July. And this is really like a tipping point because this month we've only seen 1.5 months of inventory. So that means that the homes that are currently for sale, our supply is decreasing.
So what about a recession? Is our market susceptible to a potential crash like 2008? And yes, we are in a recessive period. I think by definition, 2 quarters of declining GDP growth, we're right on the tip of that. And actually 3/4 of global CEOs say we are in a recession or will be in one in the next 12 to 18 months. And you might ask yourself, what happens with interest rates as that happens? Throughout history, during a recessive period, interest rates go up at the beginning of the recession, but in order to come out of that recession, interest rates are lowered to stimulate the economy. And actually, historically, we've seen a repeated uptick in interest rates followed by lower interest rates. And if we look back at our last 6 major corrections, you can see here on this right column, our mortgage rates have dropped throughout those periods. Over the past 5 recessions, mortgage rates have fallen an average 1.8 percentage points from the peak seen during the recession to the trough. With our rates, we're actually 3/4 percentage point down from their all-time highs back in June or July, indicating that they've started relieving some of that pressure on those rising rates due to the current situation in the economy. Now, recession doesn't always equal housing price crisis. We look back at our past 6 recessions, surprisingly enough, 3 out of those 6 recessions, we saw home prices actually increase. Now, setting aside the 2008 financial crisis, which was an issue on its own, we did have 2 periods in 2001 and 91 where we actually saw those home prices go down to 10%, which coincidentally is where we are sitting right now. Now, as Kelly mentioned, we are in a supply and demand driven market that is tempered by interest rates. So what is that supply? What does inventory look for us right now? Well, the fact of the matter is we are currently at that tipping point, as Kelly mentioned. We're starting to see a decline in sales, which we typically see around the September, August timeframe. And it's providing a little bit of support for those prices and an uptick in buyer activity as interest rates have relieved a little bit from the top. As we start to see that declining inventory, we'll continue to see these prices start to probably level out And prices peaked back in March and actually came down at this point. As a market as a whole, we're down 10%. Prices and rates go down, it typically creates a window of opportunity. If you hear about a correction on the news, you might be a little bit too late to catch that correction.
This is our recent buyer success story. We were able to save our buyers $250,000 off the peak prices and got them a loan at 3.8%, which is what we saw back at the beginning of the year. This property was listed back in May for $1.6 million. They reduced the price to 1.4 million, and we got our offer accepted at $1,350,000. If that wasn't something to celebrate, on top of that, we were able to negotiate a seller credit to buy down the rate to 3.8%, which will save you a considerable amount of money over the life of the loan. So when is the best time to buy? And how long do you plan to live here? Well, tying back to the chart that we had talked about and brought up earlier, our market goes up 50% every 5 years and it doubles every 10. On average, our market will appreciate 7.66% each year. So if you're planning on living here for more than 5 years, buying now is still a safe, smart move in this market. Now we have a really good window of opportunity. When you're buyer ready, just please reach out to either one of us, and we'd be more than happy to talk to you about next steps and potentially get you a really great deal like we got one of our other buyers.
Remember, there is no bad time to buy a house in the Bay Area. There may be a bad time to sell that home, but overall, if you look at the trajectory of our market, there's never a bad time. And what we do here is we try to take a look historically. We don't have a crystal ball. We don't know what's going to happen. But what we can do is go back and actually look at these historical events and these recessions and make educated guesses on where we're at. Our market's down 10% and our inventory's dipping. Might be a window of opportunity for people.
If you have any questions, our information is in the email that we sent over. Feel free to reach out to us at any time, and we hope to speak with you soon.
Bye, everyone.